Prabhat Avasthi, Managing Director and Head of Research and Head of Equities with Nomura India joins us. Prabhat, good to have you back on ET Now. Thank you for joining us. Prabhat, I read your earnings review note about 10 days ago. My compliments, I quite enjoyed reading it. It was a great note. Prabhat, in that note you were making a case that for Q2, top line and profits will remain under pressure and market may not get a lot of support from earnings upgrade. Now, why is that?
Well, I think it was just a compilation of earnings. Very simply speaking, the top line growth is still decelerating. So if you look at the quarter-on-quarter numbers of top line growth, quarter-on-quarter we're seeing flat top lines for ex-oil, ex-banks, which is the lowest in last 4 years. Usually you had between 3% to 17% growth depending on where you're in the cycle. So this is the weakest top line growth, and earnings have already been built into but the point essentially is that even now we are decelerating, and that sort of is, I guess, pretty much a reflection of how slow the economy is. Volume growth across companies is weak. You've seen that in autos, you're seeing that across cyclicals. So essentially result of slow economy reflecting into top lines and bottom lines of companies.
Prabhat, what about IT though? Individual stock specific moves coming in, but do you think TCS clearly is the winner of the pack till now?
Well, it is. Let's get this in perspective. See, quarterly results, in IT beating top line growth by 1% is obviously a big deal. But if you really look at whether the growth in these companies has decelerated over a period of time, it definitely has decelerated. The top line volume growth that we talked today is definitely much lower than what it used to be 2 years back. So I think first, just take out the quarterly expectations out of the picture and look at the big picture. It is definitely slower. Now the fact that earnings, those estimates have been largely built in by the analyst today, essentially means that you are essentially looking at surprises with respect to those results. And obviously there are some beats, there are some misses. But the overall picture is still very subdued in terms of earnings.
Prabhat, over the years I've interacted with you, you've always maintained that in the near term it is sentiment and liquidity, in the long term it's all about earnings. So to your mind, do you think our markets, they still lack all the growth enablers despite the reform push?
So, I mean, I've said this, channels. The point is that reform push, what does it do for the market, and what do we need in terms of reforms comprehensively in terms of getting the growth up? So, I would say that we have several serious issues that economy is contending with. One, obviously, is the fact that we run a large current account deficit, which essentially has meant that our currency has been extremely weak. And that current account deficit in the short term can be filled by capital inflows. So you can do some reforms, you can get $17 billion of capital, but on every month basis you have a very large gap to fill. And that is, I think unsustainably large for the economy of India's size. And therefore, at some point in time we'll need to do, to bring down the current account deficit by reducing fiscal deficit. So till the time fiscal reforms take place, you really cannot say that, we are out of the woods as far as the long-term trajectory of growth is concerned. That's point number one. Point number two is that part of the reason why we are also seeing slow growth is because there have been several administrative issues across sectors which have held back investments. So I would say, for example, if you look at, telecom is a good example, power is a good example, coal availability is a good example, land issues, environmental clearances are good examples. So there are, you go back and look at last 2 years. How many corporates have announced large capex plans in the last 2 years? I think there are very few who actually have announced, especially the what I call the large corporates in India. They have really not done much in terms of announcing new greenfields. So I think the reviving the momentum investment cycle is a long-term process. You can sow the seeds of those through policy reforms, but at this point in time I would say that we have just scratched the surface. I think there's a lot more to be done, and you also remember that there's an election in 2014. There is obviously some amount of weakness in political situation today. So the fact that government has achieved what it achieved is quite a surprise given the political situation. but there's a very long road ahead. And I think obviously market has already priced in some of that. I think market has priced in that there will be continued traction in reforms. Obviously that everybody's talking about it, including, you were just saying it before I came on before I started speaking. The fact is there is some amount of expectation built in that the reform process will continue. So I think there is some pricing of that, and the fact that economy is always a slow beast. You can't revive it in the very short term.
Prabhat, separately, what's the expectation from the Reserve Bank later this month? Do you think they're going to ease out on interest rates? Because the finance minister has been pretty vocal about saying that the RBI should follow or march to the same tune as the government is.
Well, so our view is that RBI doesn't have that much room to cut. So our economy view is that there won't be any rate cut, and I think the main issues there are that the inflation is still very very sticky. And the fact is that if you look at your currency, for example, in last 1 month it has started depreciating again. A bit of inflow should slow down, not that inflows have turned negative, but a bit of slowdown, and our currency starts to depreciate. I mean, that's how vulnerable it is. If you look at last 1 month, Korean won has appreciated, other currencies have appreciated, but rupee has gone back on the depreciation path. So I think from RBI's perspective, there are very challenging issues to handle. I mean, one side there's growth, the other side there is a high fiscal deficit and high inflation and high current account deficit. So I think if frankly obviously there is expectation from the government, but a fundamental case for a large amount of easing, our view is absent at this point in time.
Prabhat, you're not sounding bearish to me, but you're sounding extremely bearish to me. You're clearly painting a doomsday scenario for Indian markets. So what is the good news?
No, I think let's look in the context. I mean, it's not a doomsday scenario. The fact is that we have a current account and fiscal deficit. So that is just the reality of situation. The fact is that even globally you have issues such as this. For example, globally you have a very slow growth. Globally you have high fiscal deficit. So it's not that the India is sort of standing out in terms of its own negativity. We still have a long-term growth will still be much larger than a number of global economies. The fact is that India is under-leveraged. The fact is that India is underdeveloped. So the point essentially is that you have to look at the current scenario with respect to valuations. I think the current economic scenario is not great. And I think anybody who looks at the economy and who has been watching the economy at 6% growth, at high fiscal deficit, at high current account deficit, cannot say that's a rosy picture. You can only argue that if the policy reforms happen, then these things will improve. Essentially, that's what we are hanging our hat on. And the second thing, obviously, is that there is a lot of liquidity out there. So at the margin, if reforms happen, then from market perspective, it's obviously positive because there's a large pool of liquidity and it's looking for opportunity to chase. So if the delivery of reforms continues to happen, then I think you will not be so bearish. I mean, there will be a reason to be bullish. But the question is, with respect to today's valuation and today's reality, the market is definitely pricing in some amount of bullishness that the reforms will continue, and it's quite possible that they will, because end of the day finance minister and prime minister have been fairly committed to a reform process. All I'm saying is that it's partly priced in. So let's not, I don't want to take this out of context and say that I'm sort of calling for a big correction in the market. No, not really, because there's a global context with respect to how and that should also inform our views on how India fits within that context. And I think India does come out better. But there's a premium we are already paying for that with respect to other Asian markets. Look at India's performance with respect to China this year. So all I'm saying is that one has to be careful into just calling a bull market blindly from here unless there is delivery on reforms going forward. I don't think you can justify market going up tremendously from here.
So Prabhat, with the macroeconomic picture as well as the reforms segment being status quo, from now to year end, do you think the markets will continue to be range bound with 5,800, 5,900 being the top?
I would think so. I mean, frankly, it's again, that India got $17 billion in a very quick period of time would have been almost unimaginable to sort of imagine, 6 months ago. So liquidity aside, I think that valuations are where they are. I think market will probably have to consolidate and see for more reform evidence before it starts to move up.
Well, the Prabhat Avasthi INO has always given me money-making ideas. So let's keep it that way. Help us identify some money-making ideas.
Well, I think what we're saying essentially is that first let's starting with what we said initially was that I'm not terribly bullish on the market. I'm waiting for more evidence on reform side. But having said that, obviously there are ideas in all sectors. So first of all, I think our theme has been more defensive. We have been bullish on consumer. That has played out really well this year. We have been bullish on some of the exporters. That has been okay. For example, we've been very bullish on HCL Tech. That's worked out well for us. We have been bullish on, for example, within autos, we have been more bullish on Mahindra, Bajaj, Maruti in our portfolio. And that has been okay actually in terms of. So I think every sector obviously has ideas. But if you really think about what we are saying in a broad sense, we are essentially bullish exporters. We are bullish some of the more defensive domestic sectors, and within I think power we have probably been more bullish because of the fact that we see if one sector where you have a lot of stress and reforms really taking place is power, and related to that the financials that benefit from that. We have been bullish private sector banks like ICICI Bank and HDFC Bank. That has also played out well for us as compared to PSU banks, and that theme we continue to hold on. So so this is a fairly large range, Nikunj, and we're bullish. For example, we just initiated on media. We're bullish on that. Today we initiated on some of the consumer names again, GCPL, and Imami. We're bullish on those stocks. But to get into larger detail of those, maybe you'll have to call the analyst and sort of chat with them.
I've got a flavor of what you like, so thank you for that. Let's address two sectors. What do you expect and how do you expect staples to move now? Do you think staples could go through a price-wise correction, or they will only go through a time-wise correction? Be pharmaceuticals, something which you've not addressed. What was the tailwind for pharma till about a quarter ago? Currency now suddenly could be a headwind.
Well, I don't think currency is going to be tailwind in the next 3 years. I mean, one thing that one must recognize is that the Indian currency has got two significant fundamental issues which will ultimately play out. One is that we run a current account deficit of a very large, it's a very large number. And that essentially means that the amount of capital you need to fill in that gap remains very large. And what I think will happen is that will remain a drag. In a risk-off situation, currency will depreciate. There might be an appreciation, but on average, I think Indian currency will have headwind. Second issue is inflation. And any student of economics will tell you that if there is an inflation differential, typically currency will be a depreciating currency. And the fact is that India is running high inflation compared to other Asian currencies. So I think just reading a 2 rupee move and extrapolating in the long term will probably be unwise. So I would think that currency will not be a big headwind just because it's moved from 53 to 54. Look at what the trend has been since 2007, and it's been a depreciation trend. I think that trend probably will continue. The kind of depreciation we saw obviously depended on what happened to global sort of factors, but I personally think that there is a depreciating trend in the rupee unless we sort out some of the issues in the economy I talked about earlier. Second thing about pharma is that there is a earnings momentum, which is largely led by the strength of domestic economy itself. The fact is, the same factors which are benefiting consumer sector at a level, rural, low penetration on rural areas, etc., are also benefiting pharma sector. From pharma's perspective, there is another positive factor, that is the US, the generic market is still growing very strongly for next 2 to 3 years. So the growth is in favor of these companies. The valuations are all right. They are not as stretched as one could argue as they are in staples. I think you asked a question about staples. Now, staples typically tend to perform extremely well when economy is slowed down. You can go back and see what happened to levers in ITC 97, post 97. Their multiples are expanding. So I think till the time the economy is slow, these stocks will continue to outperform. Their multiples might not expand given the fact that they've already come up, but there is earnings growth. And the fact is that even at this point in time, given the strength of the rural economy, we are not seeing a dramatic shift or slowdown in staples. We are seeing some slowdown in discretionary, which is largely urban, but we are not seeing that kind of slowdown happening in rural areas. And you take your bet, but I would think that given that we have elections, you might see some more stuff which is positive from consumer perspective, be it a food security. I don't know what will happen, but it's sort of, for me, it's tough to believe that there will be a complete clampdown and negative action from policy side for consumer itself, given that we are getting into elections. So I think we still are maintaining that you need to remain invested in consumer and pharma space because of the reasons I just sort of said overall.